In this video, I am going to show you how to pass your FTMO, my Forex fund, the funded trader program or forexprofirm.com evaluations every single time in just 2 trades using this simple 5-minute trading strategy that I am going to teach you in this video. I will also share my risk management secret that I have used over the past 3 years when I do these prop firm evaluations. Not only that, I am now offering 100% free access to my Discord traders community and to my mentorship course. So make sure to watch this video until the end so you do not miss any important information that I am going to teach you in this video to help you pass your prop firm evaluation and to become a profitable funded trader. So let's get into this video. So let's start with the trading strategy. I have opened up a 5-minute British Canadian dollar pair, and the very first step that we always need to do is that we need to identify the overall market direction by finding the break of structure area. So in this example, we have broken this previous resistance right here, created a higher high, market made a pullback, and from this level we made a strong impulsive movement to the upside. We broke this resistance again, which was previously acted as a higher high, and we have created a new higher high here. So now whenever we are making the higher highs and higher lows or lower lows and lower highs, we need to mark the areas of the break of structure. So in this example, the break of structure happened right here, and we also have a demand zone right here because this is the area from where the big impulsive movement happened to the upside. So now two things can happen. Every time when we will break the previous market structure area and create a new higher high in case of buyers, either we will get a pullback towards the area from where we broke the previous resistance, or we can get a pullback towards this demand zone. Now the question is, how would we know that the pullback will either come to this resistance area or to this demand zone? And it is very simple. If we see the pullback from the sellers, which is right here, this area right here, if we see a pullback from the sellers having a lot of strength in the momentum, then we can expect a deeper pullback towards the demand zone. But if the pullback is weaker as compared to this buyer's movement to the upside, then it means that pullback will only come to the break of structure area. So as we can see, the pullback here is definitely very weaker. We made a first seller's movement, buyer showed up, second seller's movement, buyer showed up, then a third seller's movement, and you can see that how we are losing the strength in the momentum of the sellers. Here we had a good strength in the seller's momentum, but here the momentum wise the sellers are not really strong as they were previously. And overall, if we compare this side, the pullback side from the sellers, to the buyer's momentum inside the buyer's movement, we can clearly see the difference that the sellers are comparatively weaker as compared to the buyers. So it means the pullback will only come to this area from where we have broken this previous resistance and we created this higher high. So now whenever the market will reach this area of the break of structure and we start to see some sort of a rejection, we can see that we have this rejection. We need the market to make a strong movement after getting a rejection. So if we make a strong movement like we made this, there must be a previous resistance that we need to break. So we broke this previous resistance right here, which is also acted as a resistance right here as well. We tested this level right here. As you can see that the resistance became support and how well the market made a movement to the upside afterwards. So anywhere we place our trade here, put our stop loss just below the rejection area and our target at the recent higher high will be a good trade opportunity. And you can see it is 1:2.5 risk reward trade. So this is the example when we had a pullback towards this area from where we broke the previous market structure. Now let's see one more example and see how we can expect a deeper pullback towards these demand zones when the market will create a higher high after breaking the previous market structure area. Now here in this example, we can see that we have this resistance area that we have broken recently right here. We broke this area from here. This level will be acting as a demand because this is the area from where the big buyer's movement to the upside happened, and we can also see the strength or the momentum inside this buyer's movement. So definitely a buyer's movement is very strong. We have our resistance that we have broken, so it will be acted as the break of structure area, and we have our demand zone right here. So if we see a pullback from this area and the pullback comes down with a lot of strength in the momentum, then we can expect the pullback towards this demand zone. So as we can see that if we just compare the seller strength inside the pullback, it is very strong as compared to the previous example which we have seen that the sellers were not really strong in the pullback phase. But here the sellers are definitely very strong. We have this big sellers movement right here, then buyers made a little movement, they showed up here, and then we made a deeper pullback towards this area which is acting as a demand. And the moment we got a rejection, I said that we need a strong momentum for the buyers after we will get a rejection. But if we see here, you can see the buyers are not really strong. So what is going to happen, that as we can see, the sellers made again a movement to the downside towards this demand zone right here, and we are now getting rejected again. So we need a strong movement from the buyers after this rejection. So as you can see that the moment we got this movement from the buyers, this big strong movement, and we broke this previous resistance, the moment we tested that level, anywhere we place our trade here, put our stop loss just below the rejection area, and our target at the higher high area is a good trade opportunity, and this will be a trade opportunity with 1:2.9 risk reward. So now we just looked at the strategy that I highly recommend that you guys use when you are doing the prop firm evaluations. And before I go in detail about my risk management strategy, if you are looking to become a profitable funded trader and you want to access to my private traders community and to my mentorship course, check out the recommended broker link in the description. You need to sign up using the link from the description and deposit only $300 into your own account and place a trade with 2 standard lot for couple of minutes, and then you will be eligible to get free access to my mentorship course and to my private traders community. This is the simplest thing that you have to do. You're going to deposit your own money into your own account. You do not have to purchase any account. You do not have to purchase any membership. Once you place 2 standard lot on your own account, you can simply send an email to info@thefalcontrader.com and I will give you free access to course and to my community. So now what is my risk management? Why I said that you can pass your prop firm evaluation in only 2 trades. So here is what I mean. I like to use asymmetric compounding when I am doing the prop firm evaluations. Now here is what you need to do. In your first trade, you are going to risk 1% of your account balance, and you will be targeting at least 2.5% from that trade. So let's say that you have risked 1% and you have made 2.5%. As we saw in the video that the first trade gave us more than 2.5 rewards. So if you make 2.5%, then on your trade number 2, you will be risking that 2.5% that you have made from your trade 1. You will be risking 2.5% only your profits that you have made from your trade 1, and you will be targeting 7%. So this is how you can pass your prop firm evaluation in just 2 trades. It is called asymmetric compounding, and it is the easiest way if you know how to trade, if you know when to take the trade, and if you know how to manage your risk. You are only going to need 2 consecutive wins to pass your prop firm challenge, whether you are doing FTMO, my Forex fund, the funded trader, or forexpropfirm.com evaluation. So I hope that you have guys understood that how we can use this simple strategy with the help of asymmetric compounding to pass our prop firm evaluations in just 2 trades every single time. I have been using this method since I first did my evaluation back in 2019 with FTMO. So let me know if you guys have any question, and do not forget to open up your own trading account with my recommended broker from the link in description. Deposit $300 into your own account, place a trade with 2 standard lot, and get free access to my private traders community and to my mentorship course where I will help you become a profitable funded trader. So thank you for watching guys. I will see you in the next video. Bye for now. Peace out.